Okay, well, welcome. How's everybody doing out there? It's the 3rd of May. We are in a Fed meeting, or we have a Fed announcement today, and we'll get into it here. But thanks for joining me. As always, guys, we're going to talk trades. You're going to share trades. Just take responsibility for the outcome. Start typing those in right now, and we'll get to them in a minute here. So we do have the Fed announcement today. I just went ahead and just went out with the expectations. 25 basis point dovish outlook and no more hikes for 2023 with a question mark on there. Now, that is kind of the expectations based on some of the numbers that we did see last week, 2 weeks, I want to say 2 or 3 weeks ago, saying that CPI is coming down, the PCE numbers coming down, all the stuff that the Fed wants to see is actually working its way in the correct direction. Now the real worry is going to be, is it too little too late? Meaning, even with this 25 basis point raise, or they might not even raise at 25 basis point, thinking that, and I've also heard of the idea that if it gets too bad, we might see cuts again at the end of 2023. Let's hope not. That's just going to be reaction to all sorts of weird things. So if we get this, that's good, right? Where do the markets go from here? What we are starting to see is bad. And it was interesting today, or not today, but it was interesting to see the markets react to some news that showed slowing as bad, and that was yesterday. I did the end of day yesterday, and I made a comment of it. Now, I'm going to skip down to the bottom here. Did anyone see the ADP employment number? It was huge. Expectations were 140 something, and it came out at 260. So we are adding jobs in droves. Now, that was for April. It might have slowed down because some of this earnings that I'm seeing or hearing are super pessimistic moving forward. Maybe we'll get there when I take a look at some of these companies. Maybe you're seeing the same thing. So the sentiment I just got, the markets are bullish, more of a sideways thing going on. Technically, it's a +1, the way they're behaving. They shot up, they're above moving averages, it looks good. But there's some reluctancy to move higher. And if you were to take 2 weeks ago, 3 weeks ago, before I took a vacation, I was definitely a +1, +2. And these markets have just done nothing but kind of peter out. So I wonder if it has to do with this last Fed announcement here or what. But companies and earnings are cautious. Companies are beating. They come out cautious moving forward, but I've seen them punished. A couple of them yesterday. Starbucks, if you guys want to take a look at that. ADM, Advanced Micro Devices, and then Ford. Ford's actually holding in there pretty good. But all of them had this, yeah, we beat our numbers, but to them. And the markets, we'll see how they play them forward. So that's going to be my gauge, regardless of what happens with this Fed today. All right, so mixed. I'll get in there and I'll get deeper into that in a minute here. So economic is mixed, and I said mixed because that ADP employment came out of nowhere. We do have the jobless claims and continuing claims tomorrow. We'll see if that changes or if it goes a similar direction. But yeah, that's kind of where we're sitting. Let's get into the trade ideas. I pulled these from the last couple of weeks. I was out of town for a week, so I had some from 2 weeks ago, some of the stuff that Corey and I and Rob have been looking at, and so I decided to pull them up. I didn't pull them for the PowerPoint. I want to go live and take a look at these, so let's do that. Now, want to know why? Because I like to scroll down and see when their earnings are. So we'll see if that works. So here we are. I just need to make sure that I can pull these. Here we go. Okay, so you can see obvious. Yes, okay. So we can see that we obviously just have a Fed day where it's up, it's down. Look at the Dow, completely flat. NASDAQ and the SP just barely up. This is kind of what we expect. So I'm just going to start with the top of the list here. I'm going to start with this WPM trade. A lot of these did work out. What trade was it? It was the ADT. I hope somebody got into ADT. Because that thing, we were bearish on it. It's cheap. It was straight shares, and that thing just plummeted. So here's WPM. This is a bull. This is a basic materials, right? Gold. I talked about it yesterday. I'm going to scroll down here, but you can see, just for you guys, if you want to drag an eye here, keep an eye on this area here when I scroll down, because that is where the earnings is. Now, this is pretty accurate. It's not completely accurate. There might be some that have passed. There might be stuff that are further down the road, but cast your eye down there when I scroll. You can see it's the 4th. That's tomorrow after market close. So a lot of these are going to be difficult to trade because they're really close to their earnings. You've heard me say this before, I'll say it again. I'm cool with trading stuff after their earnings. It's nice to see something miss, get beat down, and I like kicking the dog when it's down. Not literally, that's mean, but figuratively, right? So this has got earnings tomorrow, but I just love this bullish move, this bull pullback consolidating right here just below the 20. The last few days are super volatile. I analyzed the stock yesterday at the end of day, so if you want to hear it, you can get back on there. But I still like it moving forward. NVIDIA is a darling. I might have said this before. I've done a couple of these, but it's just one of these stocks that everybody wants to buy right now. And for less or worse or fundamentally wrong, right, doesn't make a difference. It's in a consolidation area, and it is super volatile. But this thing can go off like gangbusters if there is good behind it. If the markets are comfortable and happy, I'm seeing a lot of money go into this. So the 24th of May is what I'm seeing down here for the aftermarket close announcement. I don't know if that's true or not. You could always check Earnings Whisper. But where it's at after the breakout, the end of, I should say, boy, that's Monday. So understand, the markets have been going down since Monday, Tuesday, and today. Sideways to down. This thing just shot up on Monday. So it's an outperformer. I think it'll continue to do it. That's why it's kind of on my watch list. It's expensive, so if you guys want to play something like a some sort of a spread for sure on that one. This is FedEx. I liked how this was staying sideways. In fact, this was kind of on my sideways watch list. I know we've upgraded it or moved it over to bull. And the reason being is because it's just holding in there. Let me zoom in here. It's just staying tight, and it's right up in this range where it's sticking to its 20-day moving average. Let's go down here. March 16th aftermarket close, so these already were passed. There are stocks that do announce early. Double, triple check that, please. But I like the consolidation at the 230. A little bit of a pullback that I had last week, the beginning of last week, but everything finished strong Thursday and Friday, from what at least I can see. And this is right back up there. So if you want to take it off the bull, put it onto sideways, I'm totally fine with that. It's just, it's behaving as such. And then Amazon. Bull pullback confirmation, flat out. Here it is. Companies that talk about, hey, we expect things to slow down, so we're going to take action to remedy that. Cut costs, unfortunately, reduce staff, things like that. The investors love it. It resonates with the board and investors. So we have this little bit of a pivot point that I was taking a look at a couple of days ago. And if we can just get above this 104 area and just kind of stay there, it looks like it wants to, I have a pretty good, I've got some confidence that this thing is going to roll back up to the 110. So I liked Amazon as a bull trade. All right, let's move to our sideways. Now, sideways, guys, I have a hard time doing sideways trades over earnings. However, if you want to play this sideways to a direction, please be my guest, because a couple of these do look like they could go elsewhere. This is one of them. This is TDOC. I like this sideways, but I just love the descending triangle pattern going in this. Take a look at that right through here, and it's right at this base level. We do have, boy, that's a fun color because it's the exact same color as my moving averages. I'll use black. Right there is a bull crossover, right? So the 50 crossed back over the 20, but, geez, let me get rid of this. But they are both rolling over. This is sloping, and this is still sloping, so it might cross back. So it was this surge that put these back together, but take a look at what it's done since then. Big choppy moves, a little bit of a peak here in volume, and if it can't hold where it's at, this might just bleed right down to the 24 and further down. So sideways is what I'm looking at here because of, let's get my pen. We do have support level here, and we've got the support level here, and then the resistance there. So something throughout this 26 area, fine. But if you believe in this descending triangle, and I'll draw it larger here, you want to play this slow, longer term, I'm fine with something like a diagonal put spread. Okay. Enough of that. Let's move on to the next. It's always fun, folks, when I come back from, I don't want to, like a vacation, or I step away from the markets. I have to come back and reanalyze everything. It's kind of nice. So that's what we're doing today. This is Netflix. It had its earnings a while ago. You can see it was back here. Let me zoom in. And they weren't very good, expecting a slowdown in streaming services, trying to password protect stuff. And then they've got a lot of competition with other streaming, so they might lower their costs to do that, which in the long term might help. But ever since, it's been sideways. This has been back and forth for my bear to sideways list for a while. Let's talk about this channel here. I'm basing this channel off the gap that it had after its announcement. And it's been doing nothing but chopping around. Yeah, now that's a $10 range. It's big. So it could stay there. And if it does, then sideways makes sense. Here it is again, though. However, for my bears, we do have this going on. Easy targets, basically, well, right here, 290. You could place something in this area if you want to. 305 if you want to be a little bit more reserved in your target. So diagonal put spread, fine. Butterfly, fine. Condor, fine if you want to open this up a little wider. We're about to get super volatile, right, with the Fed and how it's absorbed. But I do like it. Bouncing, like once again, back and forth between my bear and my sideways list. Let's take a look at Disney. Disney's another one that takes action, laying people off, trying to revamp their Disney Plus. It's not quite profitable. It's breaking even. They want to do some things. And when you see a company start to take action, investors like to see that. Because lo and behold, folks, regardless of any pandemic and seeing that stocks are quote-unquote cheap, you still need one that's going to pay a dividend and make money. Got a good earnings per share ratio, things of that nature. And I'm starting to see that come back in these markets. This might be one that I think will do that. It's sideways for now, but I like the crossover. I like this movement, right here, these raising. Boy, that wasn't even straight. Sorry, folks. I got caught on a mouse bubble. Do you know what a mouse bubble is? It's when you have, that's right, I still use a mouse pad, and it bubbled up on me. So I made a weird line. All right. I like that ascension here, kind of an ascending triangle pattern. Sideways for now, just because I don't think the overall markets are going to be bullish enough to really surge anything higher. But if it does, this will be one to be in. Be kind of a good one. Okay, sideways to up, but it's still in the sideways overall. Let's go to the bears, because you bears out there, these are, I'd say almost all of these are from this class or have bounced around this class for weeks. This is square, and it's just tapered off beautifully. It hasn't really made much since we were talking about, say, maybe shorting it here, because it's just bleeding off. This last week, it's been sideways. But boy, I do like yesterday's action. The reaction today is to be expected. And once again, I didn't roll lower. Let's do this. There. Fourth. That's why. So we've got this on the fourth as well tomorrow. But if it can sustain or stay below that 60, and miss, this might be a fun one. Make note of it. If you don't want to play it over its earnings, just keep it on your list. That's what I'm doing. All right. 3M, also been on our short watch or short list for quite some time. Let me zoom in on this a little bit. I'll scroll down right now. April 25th before market open. That's a little weird. Might want to triple check that. But this could be an argument for sideways. And the reason being is because it is well off of this support level here, just above 100, 101, should we call it that? And if I draw a line above these channels, I'm drawing back in here, folks, just for you to know that this is where I'm going. You can see that it's widening a little bit on the upside and shallowing on the downside. So this might be starting some sort of slow climb upward. All that being said, it is below its 20 and the 50. They are getting tighter, but they're correct. And yesterday's move, this candle looked really good. So if you want to play something sideways to bearish, wait for this to roll down, it might have a great opportunity in the shorter term. All right. What do we got? Etsy. I like playing stocks or having watch lists that we can continue to follow. Etsy gave kind of a false breakout 2 days ago, didn't it? Or breakdown. And if you're in it, you should still be fine. It's great. Love this descending pattern. Gap down, moved higher. Boy, I bet you that's its earnings. Let's scroll down here. Yeah, May 3rd after market close. So, depending on what it did, let it play itself out, because if it can't get too far above that $100 level, then this thing might just peter out. And I've seen this quite a bit. Beating numbers, coming out, but pessimistic moving forward. That's enough for an investor to the initial reaction in this case is up, and then maybe over a few days it starts to bleed off. So I have this on my watch list, and I'm taking a look at to make sure if this can stay below 100 over the next few days, this might be something I want to get into bearishly for sure. ALB, well, I think this was the last stock I looked at 2 weeks ago with you guys, and it is still super bearish. It's bouncing around, so the diagonal stuff's been working. Maybe targeted butterflies have been working. If you guys are a week or two out past when we talked about it, it still works good. I still like it. Let's scroll down here. It has an announcement today after market close. Right? Yeah. Okay, so you can play the earnings on this if you want. I'm okay with earnings plays. All right. Let's move on. LNG is the last one I have on our list. Once again, guys, check out all our posts. We've got a ton of these if you want to write them down. These are just the ones that I've got as well. LNG, this was sideways. This was kind of a sideways stock, but over the last couple of days, and guess why? Because that's right, it had its earnings before market on the 2nd. Didn't seem very good. Good volume on yesterday's move lower. Now, is this thing going to fall apart? Probably not. That's why I kind of kept it on the sideways. You can see that this does channel in areas. I mean, after earnings, it might slip, but we've got a pretty clear target here, maybe a little shorter term there. So I'm fine with it. Today's action is very positive if I want to be bearish. I love the fact that it gapped down. It's just sitting there. So if it continues to fall out of favor, maybe a diagonal spread. Definitely something combo. This thing's expensive. I might target a butterfly somewhere around the 145 level in the shorter term. Or if things go south after today's meeting and we end pretty bad, I might shoot it all the way down to 140. I like the sector. You'll see here in a second, and I just like the way that it's behaving. All right. Let's see. That's it. Okay, so that's it for our list. Sweet. Let's get going here to our market analysis. And we'll get going. So far the markets have just kind of bled lower. We saw Monday hesitated after a pretty good surge to the end of last week. Yesterday we slipped quite a bit, and today we're parked because of the Fed. Down just about 1% across the board for everybody. Now oil is getting squished. It's down to about $68 a barrel. It's something I missed over the last couple of weeks, but okay, it's there. And gold's up a little bit. What I take from this is an expected slowdown of the demand for production and growth, not just with the U.S., but globally, which is why you'll see energy start to fall. Gold, once again, if we're going to start to slow down increasing interest rates, the dollar's going to get weak, you got to go to your precious metals. I know. That's 101. That's all I got. I'm not very, I don't know, privy to things like that. That's what I got. Okay, so let's get to the charts. Big moves back and forth that went nowhere. And it's fun when you go away and then you come back because you can see this. I believe, let's see, here we are on, this is Monday, this is last week. This is kind of what we were talking about the week before. Nice base, lots of volatility that goes up, down, it goes down, up, and then nowhere. So if you take this candle, let me erase this. Not an arrow, erase. This candle here, which is today, and the candle from the previous week, which is, see, Monday, Tuesday, Wednesday, Thursday, Friday, right there. Look at my pin. We've done nothing. There to, that's Monday, right, of last week. This is as much as we've lost. But sitting through this is positioning based on a lot of pessimism and optimism. This is a market that is positioning themselves for earnings season and their opinion on what the Fed will do or should do. All right, there's nothing worse than trading on what you think the market should be doing. So we are just up above these areas and really not giving us much to go off of. Here's the diamonds. Same idea. You can see this. Here's the push-pull. Here's where we're at. This is where we started. We're above. We're waiting. We'll see what the Fed's going to do. And the Qs, same idea, but still outperforming, still strong. Here's that push-pull area, consolidating. If any of them, I would be optimistic in the Qs, which I've said that many, many times, but we'll see what happens after the Fed's announcement. So that's where we're at. That's all we got. As far as the market breakdown, we're just kind of, this is an old VIX chart. Oh, by the way, the VIX is right up here again. Isn't that funny how we had this gap? I talked about it 2 weeks ago. It tailed off, and we're right back around 20 going into this announcement. So this is an older chart. You can see April 19th. But funny enough, if you guys were to pull it up, I think we're just below 20 again. So even the VIX kind of went back to where it started. Okay, so economic reports wise, let's take a look at it. Everything is looking in line when it comes to slowing, right? A little bit of a hiccup here in manufacturing price index, but hey, we're all good. JOLTS job openings going south. Good idea. This one, though. Wow. And I know it's April. Things could drastically have changed in a month, but that is drastic. That is an absolute inflationary, demand-expecting market. So it's going to be pretty interesting to see if the Fed ignores that completely today, or if this is a number they already knew about and priced in, saying, oh, it's slow, it'll come back down next month, because it could be a lagging number. Caught me off guard. So we'll see. We'll see how that's absorbed. What do we got left? Like I said, not much. We've just got the, let me get my pen here. Unemployment rate. And where is the other one? It should be in my face. Oh, unemployment claims. There we go. The unemployment rate is going to change, and it's going to change if they factor in that ADP employment number from last month, which would tick this up. Right? Wrong way. We want to see it contract. That's all right. But we'll see if the unemployment claims have anything to do with that, or if they're going to hinder it, put weight on it. I'm not sure. Not much to really go off, guys. And the reason being is because we got the Fed and what they're going to do. More importantly, what they're going to say. So what they're going to say, I think, has a lot to do with what we could expect, but it's the price action that will give us the true sentiment of what the markets are doing. Speaking of which, let's gauge your true sentiment. I rebuilt 2 new pools. All right, let's start with the week. I'm going to go ahead and launch this. I want to see what your weekly outlook is. And we are flat, 58% at 0, 25% at plus 1, 17% minus 1. So 0 with a little bit of optimism for the week. Makes total sense. All right, so let's go ahead and let's launch this one. All right, that's good. Let's close, let's share, let's move on. 42% at 0, 42% at plus 1. So monthly outlook with only that 92% vote is slightly more bullish than the weekly outlook. Fair to say? Okay. Okay. Thanks, guys. Appreciate it. Let me catch up with you. And I'm just doing my top-down approach. And I'm with you. Slightly more bullish on the monthly outlook than I am in the weekly. And now a lot of this is going to depend on what the Fed does. If the Fed does what the markets want it to, then we're going to be positive. If the economic numbers come out the way that the Fed wants it to moving forward, then we're going to be happy. I mean, if this ADP employment number is just signs of, hey, we're going to have a soft landing, these markets are going to take off. The Fed's going to be happy. Everyone's going to be great. You're going to see these earnings announcements and these earnings projections that will be overly cautious. The markets will outplay that moving forward. So I'm not too worried about the markets continuing to go sideways or up in light of a pessimistic or worried companies, right? So those companies, they're just trying to play their numbers. So it could happen. So I'm with you. I'm exactly where you're at. All right, enough. Let's get going here into our sector analysis. And guess what, folks? Communication services, tech, all that stuff, all this growth, the research stuff, the new stuff, it's ahead. Energy, financials are in the back, so nothing's really changed. Energy took a pretty good spill though over the last week, and I think it's just because of what we're seeing in global slowdowns. Yeah, or the anticipation of such, right? So here is communication services. Good surge, a lot larger of a surge than the regular markets had. So we saw specifics go into these companies on Thursday and Friday of last week, and they're just tapering off a little bit so far. It's very bullish. It's a bull pullback. It's super healthy. This and technology, two things you still want to be bullish in. We've already showed you guys a bunch of bull trades over the last few weeks, and they're still working out. So if it's not broke, let's not fix it. On the other side, energy. I'm still fine with basic materials. I'm still fine with, like, once again, we got 3M. We've got, I haven't seen Mosaic of late, but some of these other agricultural stuff, they're just starting to slip, or still slipping. But energy had a pretty good spill off yesterday specifically. Maybe the anticipation or worries about slowing in the economy. We'll see what the Fed does and what the Fed says. But it's nice. It's broken below the moving averages. It's moving back towards that 76. These are both two good charts. I would not be mad at trading. So if you just wanted to go straight to the ETF, if you're worried about all these earnings numbers that are getting in the way, then might be a good place to do that. Okay, let's do a conclusion. So after the Fed announcement, their action and their comments, we're on our own. The markets are just going to be left with what's out there. What's worth it? Was buying some of those FANG stocks, are they too expensive now? Is there still quote unquote discounts out there in some other stocks? I saw a bunch of it was the marijuana stocks. I saw a pretty good surge right before I went on vacation in those. It was only a day or so, but there's things being moved around. So the only barometer that we have, and it is a very, very good one, is the results of the company's projections, and then the reaction of the price action of the investor. And so far, the handful that I've seen, the ones that haven't taken action, meaning closing down factories, reducing hiring, firing, Meta's a great example. In fact, one of you said, well, let's take a look at it, because Meta's just gone gangbusters, and they've been doing nothing but firing people for the last 3 months. I know that's awful, but we'll take a look at it here. So it is going to be that reaction. Are we playing valuation, or are we still playing what's hot and what everybody wants? And we're going to be left on our own. Okay, so sentiment, showing optimism for now, and it's consolidating technically. That's all I've got. We'll see what happens after today. Big uptick in the ADP employment for last month. That's a surprise. Maybe it's a lagging indicator. Maybe things go south come May and June. Jobless claims on Thursday as well. That's about all we got to look out for besides the announcement. So let's go out and take a look at some more trades, see what you guys are looking at. Thanks for sharing. Let's go back here. Let's see what the markets have been up to. Nope, just chomping around, waiting for the Fed. Okay, going through the list. Who's first? Looks like John posted Rio here. Speaking of basic materials. Great. Let me zoom in on this. This one gaps quite a bit because it is from the UK. We got a bear put spread potential, or an idea. Thank you. For the 19th, that is regular expiration. We got 1, 2, 3, four solid weeks. Oh, it started on a Monday. Okay, so the 19th, regular expiration, 62.5, 60 bear put spread. Cool. There's the 60. That's 62.5. Very nice. Not looking for much. Got a bear put spread. Put the money forward. See what happens. But I like it. It's a good one. Nice bear. Everything's correct about it, right? Good sector. Good pattern. Good chart. Boy, that thing just drifting lower pretty aggressively. Awesome. Okay. Thanks, John. Let's move on. Dan's got tap. Is this Coor Smolson? Looking diagonals. Ooh, tear to the upside, and you were absolutely right. Second, probably based on their earnings, and that thing, it was already motoring. What if there's any sort of news on it? Maybe a merger. Maybe it's going to get bought out, stuff like that. Or, hey, we're all going to become alcoholics if we lose our jobs. All right. No pun intended. Funny. Let's do the trade 62.5, 67.5. You're doing a diagonal spread July, May. Let me draw that out. And that's it's anything that's gone parabolic, it's probably just the safest thing to do is put some sort of combo on it. Selling the 67.5, I'm going to guess right about there. Makes sense. I wouldn't be mad at maybe just playing something up at this area or even a credit spread like a 60, 62.5, a bull put spread, something like that, because the volatility is not going to be as high as it would if this was falling. However, if this does start to come back down, the diagonal is a good one too. I'd be okay selling the 65 here if you guys really wanted to, if you want to sell it for the next couple of weeks, because it is definitely going to consolidate or pull back a little bit, especially right after that its announcement had that last surge. So it was already pushing really high, and this is just kind of a blow off. Now I wouldn't be surprised if this thing kind of peters over for a little bit or pulls back. So you can play that. You can. I don't want you to anticipate too much, but credit spreads here are nice. Butterflies are cool here. You could do a broken wing butterfly, right? Do something like this. That way, if it comes back to 64, you hit this point. But if it decides to shoot up to 68, you can see that you're still okay here, right? This is just going to be a maximized profit that you make. All sorts of different things. I've had a lot of conversations with you guys because of that. NVIDIA is one. How do I trade something that's gone parabolic? Those are good ways. I like it. Let me put it down. TAP for the bull side. Thanks, Dan. Regarding WPM, let's regard it. XLB is not the strong sector, right? Ooh, let's take a look at it. XLB materials. No, not the strongest of sectors, but materials includes other things that do not participate. Gold, precious metals are kind of their, what do you want to call it? Outperformer, right? You always think about, even in the tech sector, oh, that was good, like the SPY. When the financial problems hit just recently, not every SPY was down. Not everything in the spiders was down. There was also a lot of outperforming things, right? There's other banks in there that are privy specifically to bonds. So this is one of those things when it comes to your basic materials. Precious metals inside the basic materials is going to outperform. Because even I do believe XLB does carry, I don't want to say oil, but specific to oil production, drilling, stuff like that is in there. Good question though, Felix. But yeah, overall, you take a look at WPM, you take a look at XLB. If you're uncomfortable with playing that in a weaker or sideways sector, that's makes sense. Thanks for bringing that up. Good point. Oh, there it is. Meta. I knew somebody said something about Meta. So take a look at it. Look at that. This is what happens when you consistently close doors, reduce costs, fire people, things of that nature. Just bumps up here, sideways, bumps up. Now it's bumped up again. Just waiting for a breakout to trigger in is what Justin's looking for. Sure. This one's a tough one. You have to zoom into it because it is a very volatile stock. Sometimes when you stretch it out like this, it becomes easier to find points. So when we first pulled up this chart, we didn't even identify this pullback. I had to zoom in to get it. But yeah, it's overextended itself. It's popped up. It's consolidating. A butterfly, a wide butterfly. I don't know about 230, 240, 250, but you might want to tighten that up. You could play something sideways here. You could break the wing if you think it's going to continue higher. Justin was saying I'm just waiting for a breakout to trigger for sure. So I'll break out there at about 242, 42 and a half. That'd be fine. This one's tough. The spreads are wide with the options. So they do cost a lot, and you're going to see that butterfly is going to be $7 by $8.50. It's like, geez, I got to play a $1.50 spread in there. So you got to be patient with it, let it work for you. But it can work. I'm going to put it down. just because I've been looking at it myself as well. Those are some of the things I'm looking at. I haven't found anything that's really had me jump out of my chair yet, but I'll keep an eye on it. Okay, thanks, Justin. Here's Costco. We got a butterfly Costco for the 19th of May, 480, 495, 510. Ooh, let me zoom in first, and then I can start to draw. Costco, nice sideways trade here, right? Nice sideways trade. Real quick, 25th of May after market close. Okay, let's see if I can draw those lines. 480. I thought I had enough. There we go. There's a 480 about right there. 495, right about where it's at. And then 510, you said? Was that 510? Yes. Okay, so he's got a skewed butterfly, right? It's kind of like a broken wing. What you do is you separate spread here. So he's got a, somebody help me with my math there, 480, $15 spread here and a $20 spread here, right? Yeah, close enough. Well, was it 15 and 15? No, it's 15 and 25. Okay, so look at that, though. I like it. I'm fine with that. It gives the ability for this to move. Boy, let's see if I can draw the risk graph on this. How do these work? Do they slant? I think they slant. So it's going to be up like this and then slant like that. Something like that. That's ugly looking, but so it gives him the ability to keep gains even if it goes a little bit higher. I like it. I'm not mad at that. Should we do this on, let's go Costco sideways, but I'm going to put an up arrow just in case somebody wants to do maybe a diagonal on this, an out of the money horizontal. We'll also give you something similar to this. So a couple things to do. It's a huge range. It's an expensive stock. So I'm just thinking about an out of the money horizontal would make sense. A diagonal spread might be super expensive. So thanks, John. He's got another one here on snow. Okay, let's see. This is a regular May expiration, the 19th, 135, 145, 155, straight call, butterfly spread. Here we go. Nice and easy. Sure, another sideways. Let's see if I got that right. 35. Sorry. Let me get it correct. If I draw the wrong lines, it'll throw you off. Trust me, right? 135, 145, and 155. Nice and clean. Very good. Let me write that down. I like it. Let's do this since we're here. March 1st after market close. So it's either already had it. Looks like right here. Look at the volume on that. So it's past its earnings. Okay. Technology. Sideways. Okay. I like it. Let's go to COLB. Might be an interesting bear. What do you think about a long put versus a diagonal? Well, it just depends on, do you want to get straight up directional with the ability to scalp when you want it to, or do you want to sell something away to reduce your cost and play the time game? I like both. Yeah, I like both. Diagonal might be a little bit better just to make sure that if this thing wants to peter around, you just reduce your cost a little bit. Use the same strike as you would straight put, though. What's also kind of nice about that is reducing that cost. You might be able to go out an extra expiry, another week, right? It's cool. That way it expires, and then you have a reduced cost. You got a little bit more time to try to milk this thing. Plus, it might allow you to get 2 contracts versus 1. So, Justin, I guess I'm saying if you can do the diagonal, that might be a little bit better. But let me write it down as far as a bear. And let's see. Earnings, 26th of April after, right here. Oh, not right there. Triple check that. I'm not seeing anything. Well, maybe through here. Thanks, Justin. All right, let's go do a couple more, and then I'll cut you loose to watch paint dry as the Fed decides what they want to do, right? WWE looks strong. Not sure. Convert a pullback or no. Is it a high base? Let's take a look at. It's probably in one of those. Communication Services. World Wrestling. Well, hey, man. If we're going to slow down, I'm going to drink my beer and I'm going to watch wrestling. So, there you go. Let's see. These things are really outperforming. Look at them. They just had very similar move as Molson did. Maybe WWE is partnering with Molson. Yes, I'm going to give it a high base, 105, 110. So if you want to play something in between there, that's great. If you want to play something here up, diagonal spread works, or you want to wait for this to break the 110, totally fine with that. Any way of these, I'm going to definitely put WWE as bullish, but I'll put a little arrow sideways. Since we're here, let's check its earnings. There we go. The third, ooh, it just had its numbers right before market open. Huh. Since we're here, let's go a little lower. Oh, they beats on Q1 despite 11% top line decline. There's always a but in there. Just do a little bit more research on it. Right now, it looks like the markets are pretty happy with it. Right? They look like pretty happy with it. James put in buyout candidate. Oh, maybe there's something in here that says that. Go through. Take a look. Excellent. Thanks, Felix. One last one we'll do for you here. This is TFC. Looks like a wonderful bear trade. Yes, it does. And there's a few of these banks that have been sliding. I think Rob posted one that I thought was really interesting. Where was it? It was it USB? Anyways, a little while ago, it was a bank that's really slipping. Yeah, USB doing the same thing. But yes, this is a good bearish candidate. Let me put that down. TFC. Since we're on topic, folks, let's take a look at it. Yeah, it was US Bank Corp. Very similar. Big shadow down yesterday, last couple of days. But isn't that beautiful, that bear rally? And then just another one that works. I'll put that down too. I've got to build the list, right? It's been a week since I've done this. All right. Okay, that looks good. I think we're there. Let me go ahead and type these up and cut you loose. You guys can watch the Fed, figure out what they're doing, and then we'll reconvene. Here is our list. Double check earnings, please. Right? I know I tried to look for a couple of them. I didn't do all of them. Here is some. Let's see. I don't want that. I've got the wrong pin. WDB's got a little bit of a sideways candidate. Costco could go to the upside. The broken wing or staggered butterfly might work on that as well. And it's a big mover. But other than that, it's a pretty good list. I like it. Cool, guys. All right. Well, thanks for your participation as always. Thanks for joining me. And you know how to get a hold of us if you need anything. And enjoy the Fed meeting. Talk to you later, guys. Thanks. Bye.